Good afternoon, everyone, and welcome to the EGM Securities Update. Now, you don't have to change the screen. We've got Kevin Ganga back after you've become a social celebrity, Kevin. I see you were on Capital.
A little bit, yes. Just trying to educate the market. Very important conversations around financial market awareness. So it's been an exciting journey this morning as well.
Fantastic.
Yeah.
Now, you've got 3 subjects for us to discuss today.
Yes.
I believe you wanted to start with cable.
Yep.
Tell us what you're thinking there. And it seems everyone's got a little bit bulled up. And as I was listening to, is it Michel Barnier?
Yes.
I thought to myself, these guys prefer Theresa May to Boris Johnson, so they're trying to give
Make
her...
it work.
make it work. And
right, yeah.
that was my impression, but tell us.
So obviously the markets have picked up on, he's made 2 comments back to back that there's a deal imminent if things work out. But he's a top EU negotiator on the Brexit. Now, of course, the markets have always been concerned around whether or not there will be a hard Brexit. So March 29th, 2019
a
is
hard
a magical
Brexit
date.
is a breakup without an agreement. Okay,
yes. So you have about 7 months till the end of March for them to have official exit. So you want to have a deal that will be good for the UK and as well good for Europe as well. The first market sentiments are around 1.29. We've seen a 1% jump on cable. We've seen that also extend out into the euro. There's been a good
it pulled the euro.
It pulled the euro up as well. Yep. Euro has also been supported by concerns, easing concerns on Italy's bank debt issues. So you can also see we are seeing about another 1% jump as well on euro over the last 3 days. On the sterling, we are at a 5-week high. This looks like it has legs. If there's continued negotiations and you start seeing a lot more, the question mark that everybody, of course, wants to know is, will Parliament approve the deal?
Yes, yes.
So he talks about 8 weeks to a deal, but the question that everybody will ask is whether we have seen movement on Parliament approval. The other story.
So you think this is good?
I think it has some legs.
Yes.
I think it has some legs.
And
the thing is,
sends a few tweets out there.
Yes, yes. The thing is, what you need to also check out is you need to be careful about. There are probably people who had been very bearish on sterling, and their short positions have been topped up. So you could see a bit of a fluctuation, a bit of volatility today as the stops get hit out. But I think there's a bit of legs because you can see the high of late August. We're about to break out that level. And then here, so if you've got this breakout above, it's very easy for you to target the next level of 131.70.
And on balance, you expect it to move there?
Yes, especially, I think Theresa needs this deal. And I think the markets are starting to realize that there's probably something that's going to happen on that.
Kevin, you're going to now talk to us a little bit about the price of crude oil. I know it's been a big subject here in Kenya with the VAT and the government trying to raise extra revenue.
Correct.
But tell us what's going on, because I noticed it's really outperformed most of the other commodity markets.
Correct. That is very correct. If you look at from the 7th of September, actually, let's talk about 1st of September when the VAT...
This is Brent, right?
This is Brent.
Yes.
Now, Brent is your primary oil measure. Of course, Kenyan, we import what you call Marban crude, but Brent and Marban crude have about a 92-94% correlation, which would mean this could be used as a proxy hedge.
Yes.
For anybody who's looking to hedge against oil prices going up.
So if this is something Kenya Airways were doing, for example.
Correct.
They were hedging
for the fuel hedge.
For the fuel hedge, but essentially you're saying this is the instrument, the best proxy instrument in order to protect yourself.
To protect yourself against oil price movements. Now, of course, you've got the VAT that you must be concerned about, but I think it's important to have a thematic discussion about what would happen if oil was to go to 100 for Kenya. And should we be concerned about an uptick in price? We've fairly seen fair stability, but if you look at from a month ago, 17th August, we were at 72.
We've had a strong rally on a month.
Yes, $5. That's almost 10% rally. Now, at 127 pump price, a 5% addition on top of your VAT, we could look at oil going to what? 130, 135. So it's important for us now to start looking at what is affecting global oil prices, because that's something we need to be at the back of our mind. Of course, right now, Iran sanctions are a big discussion. US, Sino-China trade dispute will obviously have a play into oil. I think those are the key themes we need to look at for the next few days. I can already see oil looks like a buy.
It looks like a buy.
We're at the top of the Bollinger Band. I would want to see what sort of resistance we have, because we're just off 78 on that. And if we break 79.56, that's a high of the last 5 weeks. So it's something that we need to be careful about as well.
So if you would prefer to be on the long side here,
I would look at considering longs on the Brent right now.
Would you be suggesting to oil marketeers to be hedging some of their oil
I think
risk?
The person who needs to hedge are your manufacturing concerns, because you're asking yourself in the next 12 months to 8 to 12 months, how can I get predictability on a very important raw material input? How would I protect myself? At EGM, you're able to get a cash settled proxy hedge. So if, for example, you work with a budget of 127, you can't account for change in tax regime. You can hedge against your road levy. You can only hedge against the underlying, which is a Platts trade. Now, you're able to execute cash settled transactions where you'd protect your price at 78 and just hold that position. Now, up until the time you negotiate with the oil marketer your contracts, you're able to get a net cash settlement. If there's a price that goes up, if the oil price goes up, you just sell this position, and the profit you'd use would act as a subsidy for your price, and then that's how your hedge comes through. So it's something that I think corporates should now start thinking about a lot more, especially with this regime of 80 per barrel. That's something that corporates need to think about.
Thank you very much for that.
Thank you so much.
Thank you.
Good.
Excellent.